Hello and welcome. This is the Insurance Pro Blog Podcast. This is episode 432. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
The long, illustrious list of insurance podcasts, and we are sitting at the top.
And we're here today to talk exclusively about life insurance, and even more exclusively about whole life insurance.
Ooh, everybody just got excited.
Going with where we started.
We're dancing with the girl who brought us.
Mm-hmm. That's
So
what we do. That's what we do. Today, it's all about a big, long list of whole life insurance companies and what we think about them. So, in 2025, who's who among the whole life offerings?
Yeah.
If we were smart, we would have prepared like one of those grids with the tiers, like that people do on YouTube videos for the A tier, the B tier, the S tier, whatever that is. But I didn't come prepared for that, so we're not going to do that.
We basically have what looks to be a list. I don't think this is how it was compiled, but it looks to be a list that if you went to ChatGPT and you typed in, who sells whole life insurance in 2025? And it just gave you a list.
I know for certain that's not the way this list was created,
I know.
But it does. It has this list will be rolled out in an order that makes as much sense as a certain tariff list that you all saw a few months ago.
It's not alphabetical. It's
Nope.
not based by like our opinion of what they're doing, or it's totally random.
We're just talking about whole life insurance companies today.
Well, the intent, I realized this was not done on purpose, but the intent of our episode is not to rank them. That's not the point. Like,
right.
We don't want to give the opinion that we think one is better than the other or anything like that. There are definitely some on the list that are better than some others on the list, for sure.
Yep.
For the purpose of buying a whole life insurance policy with an eye towards accumulating cash.
Well, yes, that is the issue here. Because as we talk about whole life offerings from different companies, you and I will oftentimes evaluate their worth from the standpoint of cash accumulation. But that's not the sole reason people buy whole life insurance 100% of the time.
Absolutely. No, definitely not. And we should go ahead and preface it. We're doing all our legal disclosures at the top of the show. This is not to in any way impugn any of these companies in terms of their willingness or ability to pay death claims.
Nope.
Because to our knowledge, all the companies on this list pay death claims just like they're supposed to. So.
Yep. Nor is it any attempt to insinuate their willingness or ability to pay dividends, because we are talking about participating whole life insurance here.
Ooh, yeah, that's important detail.
With all of these offerings, because there's a lot of whole life policies out there on the periphery that are non-par. So those exist for different reasons, but today we're focusing exclusively on the dividend payers.
Exclusive.
Yes, it is. So we should probably start.
Yeah, I mean, go for it.
First on the list, Guardian Life. Next on the list. No. Guardian, innovative company.
Mm-hmm.
Really innovative company. Just much, much more forward thinking, I think, than a number of insurance companies when it comes to innovating and rolling out nifty tangential features to whole life insurance.
Right.
Absolutely at the forefront of that. More of a death benefit style thing than cash in most cases, in my opinion and experience and observation. But not necessarily a slouch on the cash accumulation side of things.
Right.
A very, very, very big arsenal of whole life insurance products relative to a number of other companies. So there is kind of a specific solution to specific problems with them.
Yeah.
And also a company that is a good bit more creative and lenient on the underwriting side than a lot of other companies on this list.
Right.
So
I will say we should probably also add that many of these companies they kind of ebb and flow.
Yeah.
With, in my opinion, what we used to see from Guardian is not the same as what we see today.
Nope.
Now, I don't mean it. Obviously, products have changed over time, but I mean in terms of cash performance, we just haven't seen them at the top of the list of any sort of comparisons in quite a while.
Nope.
And that could be, so a lot of things that we learn, that we're in regard to the information we're giving you. Sorry, I'm losing my words today. Is based on our experience of looking at existing policies from people and or illustrations, current illustrations, sales illustrations going forward.
Current product offering.
Yeah, it's not like any of these companies says we're the best at building cash value.
No,
and typically
they all do,
they're
but
not. So we found this one instance in this one case with this one product with this one age range where we are the best.
The best.
So and typically all those comparisons or any of their marketing material is based on, and this is for all the companies, not any one specific, are based on a sort of off the shelf whole life policy. Meaning if you don't set any of the options up in terms of paid up additions riders or adding a term rider or anything like that, they'll give you those numbers based on just an off the shelf whole life policy, which we often argue basically nobody buys anymore. Maybe they do. I haven't seen one in a long time.
I think in smaller cases, yes.
Yeah.
Like your $50,000 death benefit purchase, things like that.
Well, there's just not enough money to do a lot of extra. Yeah.
Yep.
You're probably right. Anyway, back to Guardian. Sorry.
I mean, that's kind of it. Again, innovative, very well rated company, large mutual insurance company. Not a lot to dislike. Not necessarily a leader per se in any specific category, but great. And that's basically it.
Mm-hmm.
Next up,
they're a leader in dental insurance.
But there is that. There is that.
We're talking about life insurance.
Yes, if we want to talk about dental insurance, they're a strong company. MassMutual.
Yeah.
Manufactures what I will tell you is the Chevy Express cargo van of whole life insurance.
That's oddly specific.
I mean, look,
as someone who has a lot of experience with Chevy Express cargo vans.
I happen to, sir. I do. Look, that thing is old in terms of approach and design. I understand that it's not necessarily old because they had to re-roll out when the whole reserving rules changed. But this product is very, very old school, but it works. And so the if it ain't broke, don't fix it mentality is strong with MassMutual.
Yep.
Not nearly as many different options as a Guardian has, but still several. And just no frills, no real innovation to say. I'm sure they would be somewhat offended by that because they did roll out a pretty strong long-term care rider feature to their whole life product, but just not nearly as robust and complicated as a lot of other companies have on their whole life chassis, if you will.
Yeah.
It's one of the plainest you can get from a large company that performs really well, actually, in the cash accumulation arena.
Mm-hmm. Yep.
So
I don't have anything to add to that. I mean,
plain, very plain, but good.
Mass policies on the books. They've done as expected. I mean, nothing unusual.
Yep.
A little, I would say this ties into your sort of a little old school in that a little cumbersome to work with.
Yes.
And to get things done internally is cumbersome for sure. So things like, reduce paid up stuff or dividend offsets, getting those things done is, in my opinion, harder than it should be.
Yep. I would agree. We should talk about your good neighbor.
Jake?
Well, If Jake is your neighbor, I guess he's everybody's neighbor.
Thought he was everyone's neighbor.
Yeah, that's right. State Farm.
Yeah.
State Farm has whole life insurance.
Okay. Well, moving on to the next
large group of people here going, oh, wow, I learned something today. It's not a very robust whole life product. It's not. There's several things you cannot do with it that
Don't
you
you think
can
they
do.
had a better product at one time than they do now?
Yes.
Yeah, that's because I've seen some in-force ones that didn't look bad at all.
Yep.
But I have seen some newer ones and I'm like, I don't know.
Yes, and so much so that I would argue here right now that there's another company that's on the list that's known for being quiet, that has made statements to prospective buyers that go something along the lines of, well, if you buy your life insurance, like your whole life policy, from companies that spend too much time trying to sell home and auto insurance, it dilutes the profits and takes away from the dividend. State Farm's former performance in the whole life space is a major reason why they made that argument.
Yeah. They had a strong participating policy at one time.
Mm-hmm.
I honestly don't know much about what they offer today.
Yeah, it's not to say that it's not good. It's just it's not as robust and versatile as a lot of the other whole life policies are from a number of other companies.
I don't think it has as much flexibility built into it.
Correct.
There's not much, and I mean that in the sense of sort of manipulating paid-up additions and term riders and that sort of thing. My impression has been that it's a very straightforward, off-the-shelf situation.
It is. It is indeed. All right. The next one. Lafayette Life.
Who?
That's mean. Lafayette Life.
Yeah. They're part of a bigger company, so.
They are. They try hard. They do.
Are you trying to get the marketing position there?
No.
We try hard. That's our new.
I just know that they're one of the companies that does pay attention to us, and sometimes they reach out when we say things they don't like. So I'm trying to hedge that right now. Look, it's not that we don't like you.
That company from Ohio used to do that a lot.
Yeah, they did. It's not that we don't like you. It's just that we're not as in love with you as we are other companies.
I would say we're agnostic with all of these, but
yeah,
at least I am.
Yeah.
I mean, they got pretty heavily into the infinite banking world.
They did.
I don't know if they still are or not, honestly, but
they were pretty tightly attached to Pam Yellen at one time.
Yeah. We've seen some enforced policies.
Yeah, they're not standouts.
No.
There's some wonkiness to their product as well that are potential problematic things regarding modified endowment contracts.
The term rider issue.
Yeah. Not favorable in that sense. There is a hard limit on paid-up additions, lifetime payments that can be made. So that puts them at a bit of a disadvantage for people who are trying to put a sizable amount of money into whole life insurance.
Right.
They're a smaller company. They just don't have the scale to deal with certain situations. So that can be not super advantageous.
Yep.
So that's just where it's at.
Yep.
Do you want to whisper out the next one's name?
No.
Why not?
Got to be quiet.
Yeah. Shh. Northwestern Mutual.
Yeah.
Yeah, Northwestern Mutual.
Big company, strong financials.
Somewhat narcissistic.
They look really good on paper as a company. I don't mean their policies. I just mean, they benefit from scale.
They do. Northwestern
they only write policies through their career agent force. So no, they will not contract with independents like us.
Nope, they won't. That's the reason we don't like them, because we can't sell them. So we just have to come up with reasons for people not to buy them.
I think someone has said that to us before.
I don't think it's just someone.
Which is interesting.
I would hazard the guess that based on the amount of policies we put in force, if we wanted to become career Northwestern agents, they'd have no problem hiring us. But that's just a guess.
But our sales would go
down. Look, big solid company, not a leader of anything.
Mm-mm.
They're just not.
Done a great job at branding and embedding themselves into certain socioeconomic groups.
Yep.
Within the country. They have brand recognition. It's, and I don't mean this in a pejorative sense at all, but it's like, I have people that I know who only buy Mercedes.
Yep.
And that's all they've ever, my entire life of 48 years, that's all they've ever had. But they equate the Mercedes of today with the Mercedes the first one they bought in 1984. Like, it's not the same.
Yeah.
It's not the same. But they got the brand recognition. It's Mercedes.
Right.
Like, okay.
And oddly enough, there are some people who feel the same way about life insurance.
Yep.
And Northwestern benefits from that.
I've been told I got the best. I got Northwestern Mutual.
Yep. Now, hey, look. One thing I will say, and we've said it for years, and I will continue to say it, phenomenal customer service department.
Great. Yeah. Absolutely. They do a lot of things really, really well. And cash accumulation just doesn't happen to be one of them.
Nope. Low cost death benefit, not really. There's just nothing that they are super specialized across the board on.
Very tough on underwriting.
Yep. As a company, they've really started to broaden out the focus and put a hyper emphasis on their agents becoming financial advisors. So a number of them have their CFP. They're doing assets under management. It is something that they have. I don't know if it's the largest or the second largest registered investment advisory firm by investment advisor representative count.
Oh, okay.
So
okay,
like a lot of feet on the ground.
Yeah.
So that has become a big focus for them, and I would argue the whole life policy. It's not that they're abandoning it, but it isn't as big an emphasis for them as it once was.
Right.
So I hope that you get the joke that I was making by putting the next one right next to Northwestern. Knights of Columbus.
Yeah.
So one more thing to say about Northwestern is that they constantly talk about ratings.
Yes.
Because they have the best.
Mm-hmm.
But if they're going to get into a ratings war, Knights of Columbus is not a company they necessarily want.
You don't want to fight that fight.
That's not going to go well for them.
Yeah. And Knights of Columbus is technically a fraternal, right?
Yes.
Yeah. Which is a little different.
Yep, it is.
In its organizational structure.
It is. Very highly rated company, very small company.
Yep.
The whole life product is not super robust, usually not sold in large face sizes.
Right.
But zero worry that the company's going to go out of business.
No.
Closed business loop. You got to be a member.
Yeah.
In order to buy from them, but doesn't seem to bother their business model. The only other thing I'll say, pain in the ass to get money out of their company. And I don't mean taking a loan. I just mean if you decide I don't want my Knights of Columbus product, I want to move it to somewhere. Oh my. Whew. Sit down and don't be in a hurry.
Evidently, they don't process a lot of 1035 exchange.
No, they don't. And they only do it like 3 times a year.
Every 14th Thursday.
Yeah. And you are in bad shape if one of those days happens to be a leap day here, or it falls on a leap day here. That's just a criticism I'm going to lay out there.
Yeah. Well, that comes from personal experience.
So moving on, we're going to cut out the nonsense and talk about Savings Bank Life of Massachusetts. Okay. Not to be confused, so SBLI as it's commonly called, but not to be confused with SBLI of New York, if that company still exists, because it had like horrible financial problems. Not the same thing at all, but a source of confusion for some people. SBLI, the Massachusetts-based company in Woburn, however people say it, because I've heard it probably 25 different ways, and the people of Massachusetts will all laugh at all 3 attempts I just made. But interesting whole life product that at one time had a ton of interest based on where the company fell on an old Blees report.
Ooh, yeah. I had forgotten about that.
Yep. They were number 1.
Phenomenal numbers.
Yeah, they did.
That always made us scratch our head. Like,
yeah, and they had a very weird whole life product that was not at all versatile or customizable. They changed that. They have different products now. Strange company in the sense that they kind of come and go.
mm-hmm.
Like they had that ranking and please, lots of attention. At one time, you could not avoid them if you were spreadsheeting term insurance. Now you can't even find them.
Yeah, they were. I mean, they were like 30% lower than everyone else.
Yeah,
something crazy.
Yep.
I don't know that I've ever seen one of their whole life policies.
We've seen proposals.
Have we?
We have. Recall. Yep, we have. We've seen a few. Mm-hmm. And at one time, there was kind of a weird quirk to one of their products that seemed to suggest that there was going to be a huge, huge spike in cash value in the first couple of years, which we questioned.
They couldn't answer.
No, we questioned, and they gave us very dodgy answers too. And they exist. That's what I can tell you.
Yep.
Next up, New York Life.
Yeah.
So
you want to talk about ratings, huh?
Yeah, probably another company that deserves the Chevy Express van moniker, because they too, like, there is nothing fancy about their whole life products.
Yep.
But they do work.
Yep.
Kind of for the person who wants to buy a whole life policy and immediately tap the cash, going to be very underwhelmed by New York Life. But
for sure.
If you have some patience, you will do okay.
Yeah, I don't have anything. Another company that makes, being as an independent agent, they make it difficult to work with them.
Yeah, so that was the other thing I was going to point out, was it's tough to buy New York Life in the way that I know they can be put together, because their career agents are clueless. So when you try to work with a broker, the process of working with New York Life is about as easy as getting money out of a 1035 from Knights of Columbus.
Yeah.
It's not a fun process.
You have to feed your details through about 2 or 3 people, and then they put together the illustration and send it back, and you're like, no, that's not not what I want. And they used to have some pretty sizable premium thresholds.
Yeah, they still do.
For working with independent agents. So
yep.
We've never ever had any luck. We've tried a couple times.
Yep.
Excuse me. Where we needed to do some comparison, and I don't think we ever got what we were asking for.
Well, at one time, years and years ago, we were contracted, and I actually had their illustration software.
Oh, okay.
Which was every bit as old and outdated as their products.
Yeah.
Kind of can be. And I make that sound like it's horrible. Again, they're decent cash accumulators. Don't get me wrong about this. But so we did get to figure out, all right, these are the levers, this is what it's got, and it's not bad at all. But again, very, very poor early cash development.
Yeah.
For what was very attractive and competitive long-term cash development. Again, there are other products out there with a bit more robustness. I don't really see, without a serious better performance out of them versus like a MassMutual, why would you choose them over Mass? Because there is a little bit more flexibility to that product. But they're good, they're highly rated, and cash accumulation, they are no slouch.
It's a good summary.
That is. Next up, One America, American United Life.
Well, which is it?
Well, it's that, but then there's also State Life, which I wouldn't necessarily throw into the mix, but it's there. They exist. I think they get skipped over a lot. Have looked at them numerous times, have never seen a proposal that was totally beating some of the other really high quality options.
Yep.
Not to say they're not high quality; they're actually very well rated. I just mean that they are not leading the ranking of cash accumulation income scenarios or anything like that. Solid option if you're looking for a long-term care life insurance product.
Yep.
But not a cash focused, not really a low cost death benefit focused product. Just not.
Yeah. I agree. I mean, I wouldn't put them at the bottom of any list, but
no. Nope.
Also a company that on the whole life side is a little difficult to work with as an independent.
Yep.
The long-term care
unless
is a
you're
totally different thing. So
unless you're like super committed to them, because they kind of like that relationship of the agent who decides they're just going to sell One America Whole Life and that's it.
Yeah, some of these companies, we haven't really pointed this out, but some of these companies were traditionally career shops. And that means for the uninitiated, that just means that you mostly exclusively write for them.
Yep.
It doesn't mean you can't broker business elsewhere, but generally, and this is broad, but generally speaking, if you're contracted with one of those companies that likes to be traditionally career focused, you have some sort of requirement to keep your contract.
Yep.
So, production requirement. So, some of these companies, it's odd. It's like they open themselves up to brokerage business, but not really. And we've always speculated, are they worried about offending their career people, or I don't know. That would be speculation, but
yeah, we don't know. We don't know, but they fall weirdly in that world of half committed to the brokerage world.
Yeah,
and but they don't really have a career system per se. It's strange,
right?
So the next one is a surety.
Okay, well, moving on.
Yep, they have whole life insurance. Now you know. Nothing to really say. I mean, they
used to show up on term quotes a lot.
Yep, they did, and they've even shown up a few times on some competitive whole life comparisons, but kind of less so lately.
Yeah,
and they probably more one you'd run into if you just decided, look, I'm looking for an insurance agent to sell me a $100,000 whole life death benefit.
Yeah, I was going to say it's just a straight policy. Like there's no. Admittedly, I haven't seen whatever their most recent product is, but
and that's where State Farm, that's where Knights of Columbus are probably going to come up much more frequently.
Yeah,
and even the next one on our list, Country Financial.
I know even less about them.
Which is another often focused more in different areas, but they've got a whole life product. It exists.
They're primarily a home and auto company.
Yep. The next one's Penn Mutual.
Yep.
So I think that it's no big mystery that we've been fans.
Yeah.
And I would argue when it comes to cash accumulation, they're often the company to beat.
Yeah.
They
less so now than 10 years ago, but yes.
They have a very innovative approach to cash accumulation whole life insurance.
Yeah, they do.
And have maintained a commitment to it that is significantly more so than a lot of other insurance companies.
Yeah.
So
agreed.
Very solid product. Very, very commonly on the top of the list when looking at cash accumulation. Like cash accumulation focus. We don't care about death benefit. We don't care about anything else. Just get us as much cash as possible. They do extremely well. More recently, they've started to dabble in the death benefit, low cost death benefit, permanent death benefit world. Can't say that that's necessarily something that they are taking by storm.
I just don't know. That's not something we do a lot of, so I don't know.
No. And looking at it comparatively to some other products that are engineered for that, they're good. They're not as much leader in that as they are the cash side of things.
Right.
They're just not. Mutual Trust Life. When I think of Mutual Trust Life, you know what I think of?
What?
Remember the 90s movie Little Giants?
Yes.
Okay, so imagine Rick Moranis' team, except they don't win in the end. That may sound heavy-handed. Look, Mutual Trust Life, they're like the little company that tries.
Yep.
They talk.
They love to talk about whole life insurance.
They do. They talk a recently big game. They were recently acquired by Pan American Life, but just nothing compelling.
Yeah,
we've
seen a couple of their policies.
Yep, we have.
They were not. Not great.
They were okay.
Yeah,
that's what they were. They too have had from time to time certain connections with various sales insurance ideas.
Yeah,
maybe the Your Family Bank people might have had a connection to them at one time. So there's that, but on their own in a comparative situation, there are other options that are generally better. Again, talking in just terms of I want a smaller permanent death benefit in force may very well be competitive.
Mm-hmm.
And Forrester's Financial, Forrester's Life, whatever they're called, another fraternal with a whole life product. Again, they exist. I think that there's
always thought of them more in the final expense world.
Yep,
for whatever reason.
That's because they have products in the final expense world. That's
okay.
totally where they tend to operate more so. But there is a fully underwritten participating whole life product that they sell that it's actually okay.
Yeah. Aren't they Canadian? Or am I confusing them?
Yes, there is a Canadian company trying to unravel them in terms of what is what and who owns what is a little complicated. But they do have a participating whole life product that is a reasonably decent accumulator, and they actually also are okay on the underwriting side.
Yeah.
So, there's that.
Yeah. You're such enthusiasm.
Well,
there's that.
Yeah. Well, the issue, as we brought up already, is the fact that there's a wide reason why people buy whole life insurance.
Yes.
We talk very exclusively about one particular thing, which is accumulating cash in whole life insurance.
Yeah.
For the most part. And that's a great thing. There's a few companies on this list that we would generally look to for that reason.
Mm-hmm.
The other ones we simply wouldn't, because they've not shown a particular strength in that category.
Right.
But we're also insurance agents with a lot of experience here, and we have sold policies to people for other reasons beyond just cash accumulation.
Sure.
And so there are times that we do sell for just death benefit. Sometimes it's somebody who just needs a small permanent death benefit. And sometimes these other companies do come in and they work out quite well in those cases.
Yep.
So that is an area where, even though it's not bad at the cash accumulation side, I think Forrester's would more fit.
Yeah.
And
agreed.
It may sound like I'm being somewhat dismissive. I just don't think it's that complicated.
Right.
Like if I'm trying to buy $100,000 of permanent whole life insurance, the difference between Forrester's, Surety, SBLI, State Farm, Knights of Columbus, it's not going to be much.
Yep.
And not really worth it to intimately analyze.
If you need a Chevy Express cargo van.
Exactly.
A Nissan Rogue's just not going to.
Nope.
Not going to fit the bill. Doesn't mean the Nissan Rogue is bad necessarily. Just not the same.
Mm-hmm.
So, and I really, that's what the point of this, this whole podcast seems like it's been tongue in cheek. It's not. What we're trying to point out is that a lot of people think I got a whole life policy. Everything's great.
Yeah.
Because they're not the same.
Yep.
Something can technically be a whole life policy and have completely different outcomes and operational components than a competitor.
Well, I remember years ago we were talking to somebody about whole life insurance, a whole life purchase, and he just happened to buy some P&C insurance from State Farm.
Yep.
And he was getting all excited about calling a State Farm agent and getting a quote for whole life just to see what it would be like. And we're like, don't do that. Because the kind of policy that we're talking about, State Farm's not going to touch. You're just going to waste your time, the agent's time. Don't do that.
Yeah. I think they did it anyway.
Yeah. Well, there's a small percentage of what we say that people listen to.
That's right. But we hope you, dear listener, are the type of people that listen.
Yeah. Yep. So there you go.
All right.
Some are good for cash. Some are better for death benefit.
Yep.
Some are really good at just smaller permanent death benefit need. They just are.
Absolutely.
And that's all we have to say about that.
Okay.
So I am Brandon Roberts.
And I am Brantley Whitley.
Thanks so much for joining us, and we will see you next week.